Dear students, good morning and thanks for coming for the, I would say, practice class. This question, DIANNE, is mainly on IHT. So let's read the requirement that is from section B. Previously, if you recall, we have completed 50, I think 53 MCQs. So now let's practice section B question, and after section B question, we'll go for section C. In section C, first, inshallah, we'll be doing individuals, then corporation tax. So then you will be having the complete flavor of section A, B, and C in the practice videos. Requirement A, they're asking complete the following sentences. As a result of her father's death, DIANNE will have to pay IHT. How much? In respect of the cash gift, 440, received on 10th June 2019. Now, number one, when we talk about IHT, so we know that IHT is payable on gifts. IHT is payable on gifts. When we say gifts, then there are timings of gifts. One could be a lifetime gift, means when the donor is alive and donor is giving the gift, so it means during the lifetime of the donor. Another timing is gift on death. When we say lifetime gift, then there are two possibilities. One is PAT, potentially exempt transfer, another is chargeable lifetime transfer. Basically, when one individual, for example, Mr. Y has given gift to Mr. X. So during the life, it is PAT, potentially exempt transfer. Okay. What happens? Let's say I'm taking value of transfer, whatever it is. We'll deduct annual exempt amount of the current year, 3,000. Last year, if unused. If previous year annual exempt amount is not used, so I'll utilize that as well. Then I'll get a chargeable, gross chargeable amount carry forward. Basically, on PAT, during the lifetime, there is no tax. This will be your gross chargeable amount carry forward. Always remember one point, no tax on PAT during the lifetime. And potentially exempt transfer means when one individual has given gift to another individual, that is potentially exempt transfer. And on this potentially exempt transfer, there is no tax during the lifetime. But if donor dies within 7 years of the PAT, if the donor dies within 7 years of the PAT, then PAT becomes chargeable on death tax. If donor dies within 7 years of the PAT, then PAT becomes chargeable on, and we will calculate death tax. And death tax is actually paid after the month of death, 6 months after the month of death. So simply you need to ignore the month of death and then go 6 months forward. For example, if someone is, let's say, no more on 14th of July, then you have to leave the entire July month. From August onwards, you will have to count 6 months. So death tax is paid 6 months after the month of the after the month of the death. Okay, now, if one individual has given gift to the trust, assuming Mr. Y gives gift to the trust, that is considered as chargeable lifetime transfer. So value of transfer, if current year annual exempt amount is available, so I'll take the current year annual exempt amount. Because this 3,000 annual exempt amount is available per tax year, not per gift. And question is always solve in a chronological order sequentially. You have to deal with the first gift first, then second. For example, if in the same tax year there are more than one gifts, it means all the annual exempt amounts were already utilized by the first gift. That's why I'm saying if there is a annual exempt amount in the current year, take that also. If last year we have unutilized annual exempt amount, then we'll take that. Now you will get gross chargeable amount. Whatever the gross chargeable amount comes, I'm assuming the gross chargeable amount is 5 lakh. So you will not be paying IHT on that 500,000. We have to check nil rate band. Nil rate band is 3,25,000. From this nil rate band, I'll deduct less last 7 years gross chargeable transfer prior to gift. Assuming we do not have any chargeable lifetime transfer before this gift, then entire 3,25,000 is available. Your taxable amount becomes 175. Taxable amount. On this taxable amount, if donor pays tax, then it is 25%. If donee is paying, then it is 20%. And nothing is mentioned, then we always assume that IHT is paid by donor on the lifetime gift. On death tax, of course, donee will have to pay only. But in case of lifetime, CLT, there's a taxable amount. If nothing is mentioned, then IHT is always paid by donor. And whenever donor pays, if donor has paid IHT, then gross chargeable amount carry forward will be, you'll take the chargeable amount, which is 5 lakh, let's say, plus IHT paid by donor. If donee is paying IHT during in case of CLT, then that will not be added to the gross chargeable amount carry forward. Now, on death tax, if donor dies within 7 years of CLT, then of course CLT becomes chargeable, and on death tax we have to pay IHT again. So assuming donor is dead within 7 years of CLT, the gross chargeable amount becomes now brought forward, whatever it is. You will never get any annual exempt amount on death tax on death estate. Annual exempt amounts are only available during the lifetime gifts. Nil rate band, 3,25,000. Unless last 7 years gross chargeable transfer prior to gift. If you have, assuming I don't have, so entire 325 is available. Whatever comes, that will be your taxable amount. On this taxable amount, we have to pay IHT at 40%. I'm just assuming it is 50,000. This IHT 50,000 will be reduced by taper relief. The table of taper relief will be available to you in exam. But taper relief is only available when donor dies at least after 3 years of making the gift. If donor is dead within 3 years of making the gift, then taper relief is not available. Repeat. Taper relief is available if donor dies at least after 3 years of making the gift. But we will not only deduct the taper relief, we will also deduct lifetime IHT. paid, because it is a CLT and there's a possibility on the CLT there was a lifetime tax as well. And on CLT, logically, lifetime tax only comes when the amount is over and above the nil band. Now, final amount will be your IHT payable. A very important point, assuming if it comes negative, it means your taper relief and lifetime IHT paid is more than what you have calculated, 50,000. Negative does not mean refundable. If negative comes, you will not be getting any refund. Then according to IHT, don't go for refundable. There's no refundable. Then you will write 0. So always remember, on death tax, either there will be IHT payable or 0. There will be no IHT refundable. You cannot get this. It cannot result in refundable IHT. Okay. Now let's come here. And question is always solved sequentially. You have to first deal with the first gift, then second, then so on. In section B, what happens? Examiner gives you a very small scenario. On that scenario, examiner is going to set 5 questions. And out of those 5 questions, the question you will be getting choices. But there's a possibility that out of 5 questions on one scenario, 1 or 2 question might be in a box form where you have to just calculate the answer and write it down. But majority of the requirement you will be having choices as well. You should assume that today's date is 5th March 25. Okay. Dying father died on 14th September 2025. Now, if somebody is asking us when IHT will be paid on death tax, death estate, it is paid on 6 months after the month of the death. 6 months after the month of the death. So it means October, November, December, Jan, Feb, March. Logically, 31st March 25. Death tax and tax on death estate will be paid on 31st March 2025. Repeat. Death tax and death tax on death estate is paid 6 months after the month of the death. Dying father died on 14th September 2024. Dying mothers had died on 28 May 2020. First, the mother died, then father. Whenever you have a question like this, then you should be mentally ready about it's a hint about transfer of nil band. Basically, when one spouse died before another, and in the same question, the second one also dies, then there's a possibility. The first spouse was not able to utilize the entire nil band, then automatically it will be transferred to the surviving spouse. And when surviving spouse dies, then you will get technically 2 nil band, 1 for the spouse which has died right now, and 1 from the death of the previous spouse. Cash gifts received from father. Diane received a cash gift 84,000, and don't forget one thing: a cash given by donor to the donee. A cash given by donor to the donee is exempt under CGT, capital gain tax. But right now the question is on IHT. Under IHT, it is potentially exempt transfer when one individual gives gift to another individual. But if you go for capital gain tax, when father has given cash to daughter, son, under CGT, it is an exempt asset. Diane received a cash gift of 84,000 from her father on 4th May 2019. With a further cash gift for 40 received on 10th June 2019. Okay. These gifts are stated after taking any available exemptions. So please, you're not supposed to deduct annual exempt amount of 3,000 current year and 3,000 previous year, because the question says these gifts are after taking account of any available exemptions. So it means then technically entire 84 and 440 is a gross chargeable amount carry forward. And if donor dies within 7 years of these gift, then this becomes taxable. Okay. Now let's read the requirement. As a result of her father's death, how much IHT she has to pay on 440 gift, the second gift? Fine. Diane father did not make any other lifetime gifts. So Diane father did not make any other lifetime gifts. These are the two gifts. First gift was cash, 4th May 2019. The second is 440. We have to calculate IHT on the second gift. During the lifetime, it was PAT. There's no tax on PAT, but right, technically, we are calculating now death tax. Okay. We are actually calculating death tax on the gift which was made on 10th June 2019. During lifetime, it was PAT, but it is no more PAT now. Death tax on 440 cash. Okay, cash gift. Gross chargeable amount brought forward is 440. Let's check the nil band. 3,25,000 less last 7 years. Gross chargeable transfer prior to gift. And don't forget one concept. If donor dies within 7 years of PAT, then PAT becomes chargeable on death tax. And question is always solved sequentially. Technically, we are calculating death tax on the second gift. Definitely, the first gift also becomes chargeable on death, because if you count the time period even from the second gift, it is coming, donor is died within 7 years. So basically 84,000 is also chargeable on death. So we don't have entire 3,25,000 nil band for the second gift on which we are calculating death tax, because the first gift, 84,000, also becomes chargeable on death. So this 84 actually will utilize your 3,25,000. So basically the first gift, 84,000, this gift was made on 4th May 2019. Okay. So obviously prior to 440, 84,000 falls within 7 years. Okay. Within 7 years means the second gift was made, if I just show you the timeline. Second gift is 10 June 2019. If you go back 7 years, you will reach at 10th June 2012. So prior to 7 years, of course, within this period, the first gift was made. So 3,25,000 minus 84, we are getting 241. So actually, available nil band is 2,41,000. Now we'll get taxable amount. We'll get taxable amount 1,99,000. On this taxable amount, 1,99,000, we have to pay IHT 40%. On death tax and death estate, IHT rate is 40%. On death tax and death estate, IHT rate is 40%. So 1,99,000, let's take 40% of that. We are getting 79,600. Now, next point, if donor dies after 3 years of making the gift, then you will get taper relief. And the table of taper relief will be given to you in exam. Less taper relief. The date of the gift is 10th June 2019. And donor died on 14 September 2024. So if you count the time period 2020, 21, 22, 23, even 24, that is 10th June 2024 means 5 years. So somewhere this person has died between 5 to 6 years. So taper relief percentage between 5 to 6 years is 60%. So let's take 60% of 79,600, that is 47,760. Since during the lifetime it was PAT, and on PAT there is no lifetime tax, that is why we don't have any lifetime IHT paid. Here comes IHT payable. 79,600 minus 47,760, we are getting 31,840. That is 31,840. 31,840. $31,840. Okay. How much inheritance tax will be payable in respect of chargeable estate of Diane's father's value? Add 1,134,000. Let's read. For IHT purposes, the chargeable estate of Diane's father is valued at 113. So they have given us chargeable estate. There's a main residence, and from this main residence, we have deducted the mortgage as well. Student, if you recall, on death estate, if there is a main residence and that main residence is left to direct descendants, who comes in direct descendants? Children and grandchildren. So if within the death estate, if there is a main residence and that is left for the direct descendant, we have got children and grandchildren. Then in addition to normal nil band 325, you will also get a residence nil band 1,75,000. But there's another concept as well. If one spouse dies without utilizing his or her residence nil band, then on the death of the second spouse, you will be getting residence nil band twice. One on the death of the second spouse and one residence nil band on the death of the first spouse which did not utilize it. So if one spouse is dead without utilizing the residence nil band, then on the death of another spouse, you will get technically residence nil band twice. But we know that we have to compare the residence nil band with the value of property, and property value is property less the mortgages. If your property value is less than available residence nil band, then your residence nil band will also be restricted equal to the value of the property. Assuming we know that residence nil band is 175, I'm just assuming that property value is 3 lakh, it has mortgage 2 lakh. So 3 minus 2, I'll get 1 lakh. So even though available, assuming residence nil band is 175, but you will be able to utilize only 1 lakh. Other assets, debts and funeral expenses, okay. The father estate has been left entirely to die. Okay. So Diane comes in direct descendants. When Diane's mother died, her estate was also left to Diane. The value of the estate was sufficient to fully utilize all of the mother's nil band. So mother fully utilized the nil band. The estate did not include the main residence. That's very important. Mother utilized her 3,25,000. But mother did not use residence nil rate band, because when mother died at that time, her death estate did not include the main residence. So it means she was not able to utilize residence nil rate band. So unutilized is only residence nil rate band. The normal 3,25,000 is utilized. It means on the death of father, you will be getting technically twice the residence nil rate band. Okay. Gift made by Diane on 1st March 2025. Now let's go back first. What they're asking us to calculate in C. How much inheritance tax will be payable in respect of chargeable estate of Diane's father valued? Now let's calculate this. Chargeable estate is 113. Let's check the nil band. Diane's father. Death date is 14th September 2024. This falls in the tax year 24-25. Okay. Nil band 24-25 is 3,25,000. Now less last 7 years gross chargeable transfer now prior to death. Whenever we are calculating IHT on death estate, then we check last 7 years gross chargeable transfer prior to death. Now, actually prior to death, don't forget one thing. If donor dies within 7 years of PAD becomes chargeable. So basically we have got two gifts. One was cash 84, another was cash 440. Both of these gifts, they actually fall within this prior to 7 years of the death. So it means we got chargeable 524. So logically available nil band is 0. Now let's talk about residence nil band. Actually, we'll get two residence nil band. One is unutilized residence nil band of mother, and another is father. Now try to understand. Residence nil band 175, let's say father, residence nil band 175 because of the mother, it becomes 350. Actually, available residence nil band is 350, but entire 350 cannot be utilized. Why? Look at the value of the property is 620 minus the mortgage, it is 240. So we have to restrict our residence nil band to 240. Even though the available is 350, but available does not mean that you are in a position to utilize it. We can maximum use 240 because the main residence value is 620 less the mortgage. So even though the available residence nil band is 350, but we will be able to use only 240. So residence nil band will get 240. So 1,134,000 minus 240 will get taxable amount. 8,94,000 and IHT paid is 40%. On death estate, you don't get any taper relief. Taper relief is only available on death estate. And we never deduct annual exempt amount while calculating death tax and IHT on death estate. Annual exempt amount are only available on lifetime gifts. So 8,94,000, 40% of that is 3,57,600. So IHT on death estate is 3,57,600. Let's see. 3,57,600. Which two of the following deductions will have been permitted in calculating the debts and funeral expenses figured 76,000 in the chargeable estate of Diane's father. Which two of the following deduction will have been permitted in calculating the debts and funeral expenses? Basically, death is when we calculate death estate, we are technically calculating net asset of the deceased person. And while calculating technically net asset of the deceased person, you have to deduct all the, I would say, legal, debts. Now, what do you mean by legal debts? See, for example, that person was required to pay any income tax. He did not pay, and before that he died. You have to deduct that. If that person was required to pay any capital gain tax, he did not pay and he died. You have to deduct that. It's a legal debt. But if there is any illegal debt like payment due to gambling, you cannot deduct. And funeral expenses, of course, you will have to deduct that as well. Let's see. The legal fees of a friend which Diane fathers had verbally promised to pay. No. It's not deductible. Capital gains tax payable in respect of the tax year. Yes. Actually, capital gain tax is other than residential property, it is paid on 31st January after the end of the tax year. So capital gain tax in respect of the tax year 23-24, yes, you have to deduct that. Then, of course, credit card debts, you have to deduct that as well. An electricity bill which Diane father paid, no, it has nothing to do. So basically B and C. What else? Identify by selecting the relevant boxes in the table below the due dates for the inheritance tax payable in respect of the lifetime cash gift 440. Remember, on cash gift 440, actually we were paying death tax, and death tax is paid 6 months after the month of the death. And tax on death estate is also paid 6 months after the month of the death. Received by Diane on 10 June 19, an IHT payable in respect of her father's chargeable estate. So basically, both IHT will be paid on 6 months after the month of the death. And father died on during September. So leave the September, October, November, December, 3 months. It's March 25. So it's March 31st, March 25. 31st March 25. So basically the answer is 31st March 25 and 31st March 25. And let me repeat. Death tax, IHT on death tax and IHT on death estate is paid 6 months after the month of the death. Let's go for the last one. What is the amount of lifetime inheritance tax payable by Diane in respect of chargeable lifetime transfer 520, which she made to trust? So how much Diane paid? She made a gift of 520 to the trust. Let's see. Gift to the trust is CLT, okay? And when donor pays IHT on CLT during life, it is 25%. Diane made a chargeable lifetime transfer 520 to her trust for the benefit of her children. She will pay the IHT arising from this gift on 10 June 24. Before that, before 1st March 25, Diane had made a chargeable lifetime transfer 70,000 to her trust for the benefit of her nieces and potentially exempt transfer 30,000 to her sisters. Diane has not made any other lifetime gifts. The chargeable lifetime transfer 520 and 70,000. Chargeable lifetime transfer 520 and 70 and potentially exempt 30 are after taking account of available exemptions. So you're not supposed to deduct annual exempt amount 3,000. Okay. No need to deduct annual exempt amount. They have already taken care of annual exempt amounts. Now, we have to calculate IHT on 520. But don't forget, before 520, there is one more CLT, which is 70,000. So logically, when will be used, basically available nil net band will be utilized by this 70,000. Let's see. And remember, we are calculating lifetime tax on CLT. We are calculating lifetime tax on CLT. CLT is made on 1st March 2025. Transfer value is 520. Nil rate band 325 less last 7 years gross chargeable transfer prior to gift. Whenever we are calculating lifetime tax on CLT death tax, we always write last 7 years prior to gift. Only on death estate we write last 7 years prior to death. So last 7 years prior to gift, we have 170,000 chargeable transfer. So 325 minus 70, available nil rate band is 2,55,000. From 520, I'll deduct 255, so the taxable amount is 2,65,000. On this 2,65,000, I'll pay 25% because it is mentioned that DIANNE donor is paying IHT. Otherwise, if donor pays, it is 20%. So IHT payable 265, I'll take 25% of this, which is 66,250. Of course, examiner is not asking here what is the gross chargeable amount carry forward. If we calculate gross chargeable amount carry forward, then this 66,250, you will have to add that into 5,20,000. If there was a question, calculate gross chargeable amount carry forward as well, then within this 520, we would have added 66,250. The question is, when donor pays IHT, why do we add that into gross chargeable amount carry forward? There's a logic behind that. The logic is technically why IHT paid by donor actually increases the value of the amount transferred. The logic behind this is only one. Technically, when donor is paying IHT as well, so it is also a gift for the donor. If during the lifetime, instead of donor is paying IHT, so that is also a gift. That is why it is technically added to the value of gross chargeable amount. When donor is paying IHT on lifetime gift, so it is not a gift. That is why we do not add that. So the answer is 66,250. So students, that was all about this question. Within, I would say, with a break of just 15 minutes, we'll start another practice video. Before starting another practice video, I will drop the message in your relevant WhatsApp groups. So thank you very much. Hope to see you all in the next class as well.